Hey everyone, Michael here. Today I wanted to give you guys a comprehensive view of what's going on with the economy and the markets. We're going to be looking at charts as far as Bitcoin, the Nasdaq, SPX, and even the Dow Jones Industrial Average, as far as a bunch of information about retail sales, production, and things of that nature. But I've done a whole bunch of GAN boxes, GAN fans, and just got put out a whole bunch of data out there that we're going to talk about so you guys can think about potential bottoms, potential tops, and where we might see some really big moves happening over the next few months, especially next few quarters as well, okay? Now, to get things kicked off here, we're just going to look at this very, very basic Bitcoin chart because I just want to talk to you guys about it very fast, just so you guys know where we're at as far as a simple technical analysis perspective. We've broken down below the 200 weekly moving average here. The yellow line represents the 200 weekly, the blue is a 50, and the green is a 20, okay? And this is on a weekly chart. We are very, very close to attempting a breakout between this nasty downtrend that Bitcoin's been under for the past 14, 15 months. It's just been a disaster over a couple years, and we know that we're coming out of a very nice cycle. There was a bunch of free money in the economy because of stimulus checks. The world was in a global pandemic, so nobody really had any money to spend except for on investments and trying to find other ways to make money, right? But what's happened over this past year is for the first time ever, Bitcoin has actually found a way to get well down below its 200 weekly moving average for multiple weeks on a stand, multiple weeks on end, right? Normally, we tend to find a little bit of a bottom or a strong support around this 200 weekly right here. Even during COVID, even though that nasty move, we still found support down there. We haven't really found that support, unfortunately, this time around. And for the first time ever, we have seen the 20 and the 50-week moving averages breaking down below this 200, which has led to some really nasty death crosses. Before this, if you guys have been watching me over the years, we've only normally looked at the 50 and the 20s. So anytime you see this green line here cross down below the blue line, the 20 below the 50 on the weekly charts, we've known that disaster is coming. Over here, 2014, 2015, disaster strikes. Over here, disaster strikes. COVID, disaster strikes. And over here as well, the trend continued, disaster struck, and we had a very, very nasty time. However, we've never had the 20 and the 50 break down. Now, the 50 hasn't broken down yet. It should probably break down below the 200 over the next few weeks, probably at the end of January or potentially, I would say, maybe mid-February. And we'll have to see what happens then, especially as Bitcoin is trying to make a massive surge up here to regain some of the losses that we suffered during the FTX crash. It's been unfortunate, but at least for now, Bitcoin does have the opportunity to go higher, and let's kind of talk about that as well. So, we can talk about the Dow Jones Industrial Average. Everything this week has been pretty much running up against some level of support. Bitcoin is the only thing that seems to be going positive, if you guys can see that, right? Bitcoin still up, still green for the week, although it started off a little rough. We're still doing okay. But as you look at the NASDAQ here, running up against a resistance level again on some of these longer term trends, NASDAQ squeezed below the 200 and the 20. That's fine for now. One day this week or maybe even next week, we are going to have a sizable pop or a sizable crash. We'll have to wait and see. This will influence Bitcoin greatly. And especially over here with the SPX, again, running off with this, running down here with a very bad week, getting rejected off of this trend line, as well as the 50-week moving average here, but also looking at the 20 as a level of support, all right? And we can always go over here to the SPY if you guys like the SPY instead. Still the same concept here, okay? Now, let's get out of here very fast, and let's just kind of talk about why the economy is in kind of this rut, because the economy is doing bad, but I wouldn't say the economy is terrible. I don't think many people are going to be saying that. I think we all just see that the economy is going to get much worse over the next few quarters. And I think that's where all the pessimism is as far as what the market is doing right now, okay? Now, as we go over here and look at retail sales, I know the data, it looks very, very small. I tried to shrink it more and more, but there's only so much I could shrink it. I think this page is down to, 200% zoomed in. You guys can see that COVID really messed up the scaling of these type of models here, but we've only had 2 bad months of retail sales data here. Historically, it's like 3 or more where we start looking at stuff like the 2008 financial crisis where we had a major recession. We've only started, and just because of how wonky the economy has been post-COVID, we don't actually know how bad information, if this is truly bad information or not. I would surmise that it is pretty bad information, primarily because interest rates continue to be hiked. We're starting to see layoffs for the first time in a long time, especially when it comes to Microsoft, Google, Tesla. It's a lot of these large market cap companies that really do control where the SPY, the NASDAQ, and the Dow Jones actually start going, okay? Now, we've only had 2 bad months. The problem is If I were to just show you guys the last year here, you can see that we're going downhill and we're not actually looking good. When I guess this might be 2022. This is like 2 years into the Biden administration. The economy was doing perfectly fine. We just had a lot of inflation, but sales were up because the prices were up. Everybody had to spend a lot more money, and it kind of clouded what was going on here. As time went on, you saw that people just ran out of their savings accounts. They ran out of credit limits, and people are just saying, hey, I can't spend as much right now. It's just too hard to spend. And relative, even during the holidays, people still were forced to not spend as much money as possible. I think a better way to look at this is just to put up the line chart here so you can see, hey, we're going downhill here, okay? That's what really concerns me now. People aren't spending as much money, and if people aren't spending as much, our economy suffers because the basis of the American economy is spend, spend, spend. Let that money just circulate and slosh around, and eventually everybody has a little piece of the pie here. All right. Now, as far as industrial production, this is something I do keep an eye on, but it's not as accurate, I would say, as exports or retail information. Because you can see over time, in 2015, the production was down. In 2008, production was very, very much down. And during the dot-com bubble, 2001, type of economy gut, we actually did have our production down here as well. For me, this is still bad news here. Again, I'll just kind of show it to you over here by going over to last year. You can see that we're starting to accelerate the losses. It's more about the acceleration that we're seeing right now. Not nearly as bad as if you go to line chart. It still looks bad, but it's, we've been okay this year so far. My main concern about this is if you go over here to the past 25 years, you can see we're going down still. What was happening during each of these times is always important. So we had the dot-com bubble, the economy slowing down right here, 2008 financial crisis, really bad time. Let's hope we don't have anything bad like that. But in 2015, 2016, you always see something like this happen. And it's really interesting because I was looking up the reason, like why were production slow? Why was there so much controversy, so many problems in the market? And I had totally forgot that if you guys remember underneath the Trump administration, we were having multiple trade wars. We were trying to renegotiate with the European Union, renegotiate with China, renegotiate with Canada and Mexico. And while we walloped, I guess, Canada and Mexico into a deal that really favored us, and Europe, we kind of got them into a little bit better situation, but I would say it's kind of it was break even. China, that problem really lasted for a while, and we're still kind of seeing the consequences of it from today. Now, and I might even say China won that deal, actually, even though no deal was ever made. They were able to stand their ground while, you saw Canada capitulate to the United States, Mexico capitulate to the United States, and etc., right? So now I would just say, guys, it's not the end of the world. We're still in an okay spot, but we're starting to see that initial step where everybody's eyes are starting to get glued and we're like, whoa, 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 whoa. So if you guys were to get anything from these two data sets as far as retail sales and industrial production, it's not that we're in a terrible place. It's that people are now starting to see, whoa, something is going on. Now we have to pay attention. Because as of right now, as far as the markets are concerned, whether you're looking at the SPY, the Dow Jones here, the markets are down, but it's not like we've had some type of really, really bad market cycle, because all you have to do is go back a while ago and you can see what a really bad market event looks like. It's a tanking. It's a capitulation. Go over here to the SPY. We haven't even come close to that, and that's what I think we're going to have to see before this bear market is over, before we start looking at some positive stuff. And you can see the NASDAQ as well having a very bad dot-com bubble and a very bad 2008 financial crisis, but we haven't seen anything like that yet. And I think we won't get out of this until we actually see that, okay? Now, going over here to Bitcoin, just look at some technicals over the past few months. Again, I put out a whole bunch of Gann fans and a whole bunch of Gann boxes and stuff like this. This is going back all the way to 2011, a very, very, very long time. This is probably one of the least accurate ones I have, but you can see where we did find supports relative to the entire market back over here in 2021, back over here in 2022, when we actually saw our first big crash. This was actually a solid level of support. They tend to work best on the first time you come after it, then you have to wait a few months before it actually becomes viable again. You can see up here support over here, but eventually when we did break down, we found another level of support there, just like we did over here, okay? And you can infer actually at the same time that, hey, there was a support level over here. You could actually just draw a basic trend line. Most of you guys, I doubt, are putting up Gann boxes and stuff to show this. Most of you guys might just have a trend line there. And although the trend line shows you some stuff, of course, the Gann boxes show you a lot of other stuff like potential peaks like that, potential peaks like that. You get what I'm saying here, right? Now, we've come down, we found another level of support over here. We did find a nice level of support right here. What was interesting about this move, though, is this is when Celsius was crashing. We had, there was a fears that Robinhood might go down. There was fears that Binance may go down. Just a whole bunch of fears out there. Voyager was also going down at this time. It was just a catastrophe, basically, right? Three Arrows Capital, just disaster. So it actually did break down below this Fibonacci spiral right here, which normally, or circle, if you will, normally we tend to try to hold these a little bit more. And you can see over the past few months, we've actually have held this, right? Perfectly. Right there, finding some support levels, and now we're just making our way back up. But the one thing I want you guys to see about this is, as of now, according to just this one Gann box chart, we really don't have much resistance blocking our way if we wanted to come all the way back up here towards 27,000. Now, do I think we're hitting 27,000? No, unfortunately. I think the max we're probably going to hit is 25, 26,000 because of these big moving averages here as far as the 50 and the 200. Because every time we have a death cross, something nasty usually happens. It's just the way it is, right? Death cross there, death cross there. We just keep on coming down, unfortunately, right? But that's okay. Now, that's all I wanted to show you there. Here is one that is a very, very, very complex one. Put that back. This is a number of different Gann boxes. This is 1, 2, 3 Gann boxes here. So everything is very, very cluttered. But you guys can see right now we have a little bit more resistance. You can kind of get a little bit more of an idea of why we've stopped in some places over the past few months. Now, when we go parabolic like this, nothing can stop us. And you can see how we just blasted through one level of resistance, 2, 3, 4, 5, 6, 7, 8. I guess we got 7 levels of resistance and finally got stopped up here. But if I go over here from the weekly chart and I go over to the daily chart, you can see right now we're gearing up for a move to test out this 21,889 level. Let's just call it $22,000 level. I think if the market continues to move up over the next few days and even into next week, we're going to try to easily break out above this $22,000 level and make a push back up here to 24,000. Once we're up here, I think things get very difficult just because of the moving averages and these levels of resistance that we're going to see on other charts, as well as the SPY, the NASDAQ coming up soon. But I do think that Bitcoin is going to try to make a play for $22,000, or at most back up here to try to reach new highs for this month, I would say. But I do think because of where the market's at, it can easily make that push after we've had this nice parabolic breakout right here, breaking out of a number of resistance levels, right? If I go back over here to the weekly, you can see this was actually holding up for quite a bit of time. We had a strong wick, but of course, we got rejected off of the Fibonacci circle and these 2 support levels right here, or 1 support levels and this one as well, okay? Now, all I want you guys to really get out of this chart is we have an opportunity to hit the $22,000 level. If we break out of this, the next level of resistance is between 24,000 and about 24,500, okay? If we, that's that big next level. If you guys were to buy any type of breakout that would occur over the next few days, your scale out levels would really go into $23,000, $24,000, which would be good for Bitcoin, a lot better if you guys are trading altcoins instead, okay? Now, as far as what happens down the road if the economy starts getting worse and we start having full-on capitulation moments, that's where things change up a little bit. And you can see that we would definitely come back down here to 14,000 and such, and things get really, really nasty, unfortunately. But, you know, there's not really much of a support structure below this just because, look at this. We would come down hard. There's a few spirals and stuff and maybe a few time levels, but there's really not much support once we break down below 14,000. So let's talk about what happens after that. I think this one has been very nice to me. This one is a little bit further than the last one. This one goes all the way back to 2011. We do have a support level down here around 14,000. If I go over here to the daily chart, you guys will see that we actually managed to find a good support level right here a few months ago. This is back in November with FTX. We found support there. I don't think we were really supposed to break down below this because of FTX, we had no choice. The capitulation was imminent and people really just panicked and ran for the hills, sold everything they had and just moved it out of Binance, KuCoin, BingX, whatever. They removed everything. And it was an intense moment, to be sure. We tried to break out here, and guess what? That level held up pretty well. These levels take a lot to break down below. But just the same, if you look up here, we have an opportunity to get back up to 27,000. Again, I'm more of the $24,000, $25,000 level, but again, at the max, I see it's 26, 27. This is possible, but it'd be a wick event where we got a skyrocket and then we crashing back down within the same day or within the same week. It'd be a very bad event, okay? So I would be selling a lot right here. This is more if you guys are swing trading and not if you guys are long-term. If you guys are long-term, you guys are just hanging on with these waves and having some fun with it, right? Now, going over here, the next support level I see off of this one really does seem to come back around $10,000. And I can really see us falling down here if the economy goes through a major capitulation event. It depends on how bad that capitulation event goes, but I can theoretically see us Bitcoin going back down to $10,000 or so. And that would probably be my worst case scenario. We could always go down, I guess, $5,000 or $6,000. But to me, that really signifies that the market has had a very catastrophic bad landing. And we haven't seen any evidence that's coming yet. Maybe a moderate recession is, I think, what I'm pricing in. Right now, the market is pricing in a light recession or a soft landing. I don't think it's going to be that peaceful here, okay? Now, there's one other thing we could look at as well, and that one might be, we looked at this one right here, this one right here as well, this one right here. There we go. There is a Gann fan way down here that I decided to put up for us, a couple of them. We have a couple support levels around 14,576, and if things get really, really bad, I just put on an 8-to-1 Gann fan level down here around $8,000, 7,300 or so. That's like the ultimate I can see us going down. I don't see Bitcoin going down that much unless the economy really does go through some type of catastrophic event, okay? And to me, I don't think we're headed for a catastrophic event. Let's go back over here to the NASDAQ very fast because I want to show you guys what's going on here because we have a multiple levels of support. And the NASDAQ typically honors all of these technicals a lot better than Bitcoin because we don't have Goldman Sachs going bankrupt or Citadel going bankrupt like we have in the crypto markets. So this is a little bit more honest of what the what the system is really going through, what the markets are really thinking. Okay. Now we're using the lows from 2020 here, and you can see over the past few months we have had some nice support levels here. Back during the June capitulation, we found support level there, bounced back up, hit our level of resistance / pivot point, if you will. Came all the way back down, held for a day, but then we found our next level of support. And so far, basically, we've been kind of dealing with this new death cross here between the 50 and the 20 and the 200. We will have another death cross here between the 50 and the 200 here over the next few weeks. I would say next month or two. And again, historically, whenever this happens, it happens way over here. Sorry, I have log off, so I can't really zoom in and out like I normally want to. But the 2008 financial crisis, we had those death crosses right there. And again, over here, the dot-com bubble, we had those death crosses happening right there, and we continued to go lower after them. So what I'm actually thinking right now is we're over halfway done with this drop. At worst, at least to this chart, we're going to be going back down to 10,381. I do think the market is going to get worse, like I said before, just not have a major capitulation where the whole economy is put as it was during the 2008 financial crisis. And so for that, I've actually come back over here to a couple other levels of support. We have two over here, and I'll just show you guys both of them, I guess, for now. The first one we have is our next level of support as far as the NASDAQ is concerned over here, is about this 9,000, 9,500, 9,400 level. I think that's where we might be heading, and just going back down to these support levels here as far as what we saw from the highs of 2020 before, unfortunately, COVID just wrecked the entire economy. We've managed to hold up pretty well on these Fibonacci circles, just fine. We've held up okay at some of these support levels and some of these Fibonacci retracement points, but I think things may get choppy between 10,000 and 9,500 at worst. At worst, I think we come back down here to 8,700, and this is really my buying zone for a lot of different companies out here as far as the NASDAQ, the SPY. The thing that I want you guys to understand here is even if the NASDAQ is down here, you guys may find buying opportunities for different companies that have already capitulated a lot earlier than the traditional market. So, a Netflix may be an example. If you bought Netflix a couple months ago when it crashed, you'd be up 70% right now. That's the type of stuff I'm looking at. Now, while Netflix may crash again, you can still play those moves. Amazon crashed a while ago. I bought a bunch of Amazon, and now Amazon is profitable with me. If I see the market start to slip up again, I may sell it and rebuy more for long-term holdings. I'm going to be doing this a lot. But to me, it seems like the NASDAQ, my buying zone is really going to be between 8,700 and 9,500. Maybe I'm making a big mistake by thinking the market will come down too much, but that's why I'm doing dollar cost averages. Most of the moves that we're talking about today really entail when if the market has a very negative, nasty move because the economy truly does just have a bad time, not a devastating time, just a very bad time. I think that these are going to be great buying zones where you guys could load up on your favorite tech plays, favorite energy plays, whatever plays you guys are really hoping for, where the market dips and you guys are looking for some long-term prosperity there, especially if you guys are looking for dividend plays, okay? Now, For NASDAQ right here, it really is about that 8,500, let's say, to 9,500 zone. That's where I really think that we find the bottom here for the market. But it's okay to start buying now because I myself have started to buy now, right? Now, as far as this last one here for the NASDAQ, and then we'll get over here to the SPY, you can see that we've been just kind of hovering down here bit by bit. These support levels haven't been the best as far as these Fibonacci retracements. I haven't been using them all too much because it seems like the ones from over here, again, this is back from 2008, haven't really been the best. During COVID, you can see this drop was, it was absolutely beautifully timed. Everything worked out beautifully. But going to where we are now, it's just been okay as far as these Fibonacci circles. Not much else, right? Had some support there. We found the easy levels of resistance there, some support and resistance up here, resistance up here. But I like to see some of these horizontal lines work out too, and they really haven't been working out too well, to be honest. So the only thing I would really use on this chart is just this downward move. So perhaps over the next few weeks, if we come into contact with it again around 9,800, this is probably next few months, honestly. If we come back into contact with it, I would see this being more of a level for more of an opportunity to be buying, especially for a short-term pivot. Remember, you want to buy the zone, not necessarily just the exact moment it hits, because rarely does it ever hit exactly, okay? Now, if we kind of zoom in here a little bit, you can also see that we've had some resistance here and had some resistance here. For the first time in a while, this line has actually been relevant for us, right? So, because we do have this downtrend here and we have this slight uptrend, if we do break down below this downtrend, I think this is what starts maybe a more of a nastier move going into February, but it's going to take us a little bit of time to even get down here. I don't think we're just going to have a big capitulation moment like this. We may just continue to go choppy unless the economic data or the earnings that come out over the next few weeks are a lot worse than expectations. And at least from what we've seen so far, they've been okay to bad, but not so bad that people are like, oh my gosh, the world is ending, or oh my gosh, I need to get out because we're going to be dropping down and I need to be able to buy at those levels, if that makes sense. People that have been buying and holding, they're like, yeah, I'm going to keep on holding because this is a long-term thing. Hopefully that makes sense to you guys. Now, however, if we do manage to break out from here and we do find a nice move, I think at most we'll probably just make our way back up here to 12,500. This will be some type of double bottom or triple bottom, however you want to perceive it. And that breakout will actually push us back up here to 12,500, maybe higher. But at the end of the day, we are going to be coming back down and eventually breaking down below this because of this death cross here between the 50 and the 200. Again, I know it's hard for me to zoom in on these, but whenever we have these death crosses between the 200, those are usually historically bad events. Now, they may happen after a nasty move. They may happen right before a nasty move. Usually it just depends on how bad the economy is. Like dot-com bubble, we broke down here, and we continue to go down and down and down. But the 2008 financial crisis was such a weird scenario that we actually had the big drop beforehand. I would surmise, again, that we're kind of more in this type of scenario because you can just see how much we've ran up over the past few years. That, like, small moves in comparison, right? Small moves. We went parabolic starting around 2020. We just went crazy with tons and tons of free money injected into the economy. It all just went straight into the market. And that's why you saw all these people becoming new richest man in the world, Elon Musk, new, Bezos, all-time highs in wealth, because all of that money just got pumped into the market. And you saw lots of individuals out there selling vast amounts of their stocks because they knew this couldn't last. They had to cash out. And most retirement accounts don't cash out like everyday billionaires and millionaires do, or people like us that watch the channel, right? So that to surmise everything that I want you guys to understand, we have had some really good support levels here as far as the NASDAQ is concerned. You guys can see right here. Let me actually just do the 2 for right here. There you go. Where we have had some support right here on the $10,300 level. I think that's our next level of support if we do manage to break back down. But eventually, I do think we're going to be heading back down here to around the $10,000 to $8,500 level. And that's where I personally want to start buying for a longer term play. If things get very, very bad, we may always get down a little bit lower. And that move that's a little bit lower, I would say, would actually go back to this chart, which we didn't talk about. That would really come back down to 8,000 to 6,500. That'd be going down to the COVID lows. I don't think we're going to be going down that much, especially since we still have so much money sloshing in the economy after all the money the Fed just kind of injected in there during COVID, like the Trump administration, Biden administration's tons and tons of money. I don't think we're getting down this low, but I do think 8,500 is going to be reasonable. My dog Loki says hello to all of you as he stretches on my shoulders and digs his claws into my shoulders. But now let's go over here to the SPY very fast, just so you guys can see this in another different way here. Again, we've hit these levels of support. This one has been a lot easier for me to trade. I would say over the past few weeks, we've hit around the 200. We've managed to hold some of these Fibonacci levels because over the past few months, we really haven't been able to do it because the market was having these wood capitulation moments. Well, I think it was just negative news and the inflation and rate hikes, especially last year. This is June when the oil prices were kind of going crazy. It kind of hurt the prices. But before that, we were kind of doing just fine, right? Riding it, bouncing where we could, not riding it over here. Now we're starting to ride it again and start to have those nice bounces. The one thing I just want you guys to see as far as the SPY here, because we just talked about some stuff as far as the NASDAQ, and we'll go look at the SPX here in a second as well. Oh, this is the SPX, excuse me. If we manage to break out here, I think it's going to be a short term or a short-lived breakout because I do think we're going to get rejected off of these Fibonacci levels. So if we have a breakout here, this is just in case. If we do have a breakout going into February, I do think we're going to have a February nasty move down where we just get flat out rejected and we start coming back down here to probably 3,700. This could be a massive fake out if we do break out. So far, history says we're not going to be even breaking out because we've just been having a tough time. But because the market is so focused on what the Federal Reserve is doing right now and less on economic data like we've been seeing so far, right? They may be looking for the Federal Reserve to stop raising rates, and that'll be the big boom that they're looking for. And if they get that big boom, the market will rally, and then eventually we're going to be like, okay, let's stop looking at the interest rates for a little bit, and let's start paying attention to, frankly, earnings, what we're supposed to be looking at here. They haven't been doing that yet. If I were to go over here to FinViz very fast, just to kind of show you guys what I'm talking about here, you see the market's having an okay day, not a great day, but a decent day, right? If we go over here to something like an Apple, which is like one of those big dogs, a very large market cap, right? Trillions market cap. Well, you can see that while, the agencies out there have been reiterating it or maybe downgrading it, nobody said it goes from a buy to a hold or from a hold to a sell. Once they start going from buy to hold or hold to sell on some of these really large market cap stocks or companies, that's where you start to have these really nasty moves where, again, you start to see the SPY crash down and the NASDAQ crash down. We're not there just yet. But from the SPY perspective here, I just want you guys to understand we have a support level right down here around 3,600. If things get really, really bad, of course, we're going to be going back down to COVID levels. And for the SPY over here, that could be around $3,100, okay? Now, I'm hoping we don't come down that far, but I do think there's an opportunity to say that, hey, this would be an okay time because, again, history says we've kind of come up so much, it's okay if we do have a really bad crash event, okay? Now, to me, where I really am buying, because we can look at a few different ones as well here. Go over here, this SPY one right here. This one is a lot lower, of course. You see we have a support level right down here on 3,200, 3,100. That kind of matches up what we were just talking about a few minutes ago. As far as this one's concerned, right, we're heading up to some of these levels of resistance right now. This one we kind of matched up right there. This one we're matching up right here with these fibs. Fine, it's going to be hard for us to break out. We already talked about that. But if we do start breaking down below these levels, we have short term right here on 3,600, which we just talked about from the last chart. But I would say that my buying zone from here is really about 3,000 to 3,300. I know it may go lower, of course, and there's other charts that really talk about that. We can go over here very fast. This one goes back over here to before the COVID lows, way down here on 2,500. Again, because of all the free money, I just don't see us crashing down that hard to 2,500. But I can see us, again, we're taking a little bit of a pit stop here, anywhere riding across this level right here, this Fibonacci circle, I can really see myself buying along that because so far, this has been a great opportunity to buy each time we've come into contact with it for some pretty hefty waves. Now, we've had some support levels over here that really haven't been the best, some support levels over here that worked out okay, but still not the best. Really, what I see working out here is this Fibonacci circle, and the next time we come down and tap it, I will be buying up some more as well, okay? And that's more of a swing play here. The last one we'll talk about here, as far as this type of stuff, is really the currency index. Because, as we've talked about the Federal Reserve, and you can see how America's debt has just skyrocketed ever since 2008, they just had to figure out a way to get the economy pumping again. And since nobody wanted to spend money, they just started giving money out. Extraordinarily crazy, kind of stupid in hindsight, but it worked kind of, right? It was kind of like, we swept underneath the bad stuff underneath the rug, and we let all the good stuff kind of show off for a little bit of time. As the debt has kind of spiraled, I would say spiraled out of control, we have started to see a lot of inflation, especially after the Joe Biden's first major bill to kind of help people with checks back in when he first became elected president. Good intentions, bad consequences, unfortunately, but people did get some money in their pocketbooks. Unfortunately, did get eaten up by inflation. But the problem with all of this now, and why I do think we still have a little bit more of a bear market ahead of us, unfortunately, is this. Over the past 40, 50 years, we've had inflation and we'd had recession numerous times. But at this point, Jerome Powell, and you guys have to understand this, he is old enough to remember the 70s. Well, I'm not because I was born in the 90s. He's old enough to remember how bad inflation got in the 70s and 80s and what it took the Fed, how much work the Fed had to do to get them out of that pickle, okay? We lowered rates too fast and too early when dealing with inflation in the 70s, and that caused recession after recession after recession until Reagan came in. And when Reagan came in, we had to raise interest rates all the way up here to like 20%. We're not going to get to 20% this time. At most, it's going to be 6%. But it's going to be a very hectic time because of that. So instead of just having kind of wild swings like this, we don't want to see this, right? Instead, what we're going to be having is he's going to bring us up to 5.5% to maybe 6%. And we're just going to go sideways because we're going to be waiting for inflation to hit 2% before we actually start slowing everything back down. If we go to where we are now on this chart, you guys can see over here how we went sideways at 5.25. That's what we're kind of headed for. We just want to go sideways. But what we saw in 2006 was not inflation. We're not battling inflation. We were just trying to keep rates up so in case the economy went sideways, we could lower rates. So even if these type of analysis that we've seen over the last few years, as far as exports coming down like this, right? Whenever the exports come down, that's usually a bad sign for the economy, and we've seen this for the market as well. 2016, what did we just talk about? Coming down. 2008, financial crisis, dot-com bubble coming down. COVID, of course, coming down. We've started to see exports fall, unfortunately, and that's because Europe is in a pinch right now. Their economy is not looking so hot. We have a war between Ukraine and Russia. We have China and COVID lockdowns kind of still with a weird reopening structure. The world's just not in a good spot. That's just how it is, right? But because of all this economic data kind of showing us we're starting this downhill climb, even if we do get to the point where we're having bad times like a 2001 dot-com bubble or a 2008 financial crisis, because Jerome Powell is terrified of leaving rates or cutting rates too early, we're going to be staying at this rate. You can imagine this type of line for a very long time. This could go on for months and months and months, probably 3 or 4 quarters here before he decides to cut, which means there will be tons of pain on Main Street, unfortunately, but there's going to be an opportunity to get inflation down so inflation doesn't continue to spiral out of control. That's going to be the really big pain here. Because if inflation spirals out of control, Bitcoin may soar. The stock market will not soar, but that's only because relative Bitcoin to the dollar, right? It's a trading currency. So to kind of wrap all this up, watch to see how the economy continues to move downward over the next few months. The Fed is slowly taking down their balance sheet. They're going to have to do this for a while now. 2008, they really picked it up. 2012, like really under Obama, where the economy wasn't too good and they were really trying to spur growth, they started pumping tons of money in there, and they kind of stopped again once the economy was okay back in 2014, 2015. 2016 came. They had enough time to really start lowering it down bit by bit. They were really starting to increase it because Trump did the tax cuts. He really got the economy in overdrive. COVID happened. Again, we had to fix it all over again. I guess Joe Biden came to office, still kind of had to pick it up a little bit more because we were just ending it. We actually started doing it too much. Well, I guess the whole thing is too much. But at the end here, you can see we're starting to bring it back down again. He's going to continue to bring this down even during a bad economy. When normal, we push it up during a bad economy. So they're trying to get their balance sheet in order. Exports are going down. Sales production is going down, especially over the last year. We're going in the wrong direction. Everything is heading in the wrong direction at this point, maybe besides the dollar index. Because at the dollar index point, we still have a support level down here around $100. And that's going to be interesting, because if we kind of bounce off of that, that's going to be a very bad sign for the markets. It'll kind of tank the markets a little bit more. But a lot of the growth we've seen is the fact that a lot of the downward movement, we've seen over the dollar, is the fact that other economies have started to raise their interest rates, and that's been weakening the dollar quite a bit because we're still raising our interest rates, but now the other economies of the world are catching up to us. And you can even see from the last few days, Japan didn't raise its interest rate. And so far, it's been able to kind of hold the Bitcoin, or excuse me, hold the market up just a little bit here. If I go to auto, you can see yesterday as the Japanese said, hey, no, we're not going to raise interest rates again. That helped out the dollar a lot. But unfortunately, Europe is still going to be raising interest rates. That type of stuff is going to be happening. So the dollar should get weaker. It's going to look kind of weird going forward, everybody. But I would say, just to wrap this up, my buying zone really happens to be for Bitcoin anywhere between 10, 12,000. But I am still going to be buying heavily when we hit these support levels here on $14,000 or so. Because every support level that I see, it really only comes down here to $8,000. I'd be happy to buy Bitcoin at $14,500 to $10,000. I think that's as far as we probably go. If we do go down below that, then we start talking about $7,500 to $8,000, and I'll still be buying then. But as far as the NASDAQ and everything like that, we're in a pickle. It's okay. The NASDAQ at most, I think, falls 89 to 8,900, 8,700, maybe 9,000. If things get really, really bad, we could always take more. But I'm not pricing in a catastrophic recession. I'm pricing in something more of just a moderate recession where things get bad, but most people are doing just fine. Unemployment maybe gets up to 6, 7%, 8%. But we're not seeing 10 double-digit recession jobless claims numbers, if that makes sense, okay? So hope you guys enjoyed this video. I know it was a little bit long, but I do think it is important that you guys saw some of these support and resistance levels. And if you guys thought I moved too fast, you guys can always rewind to certain parts and look at these support levels here because you can see how the numbers all match up, okay? So have a good day, everybody, and thanks for watching.